Bitcoin over the next month. Something All right, on to the technicals. Um, Starting with the Bitcoin versus the dollar chart because it looks a little better thanks to Bitcoin doing all right lately. The the Fibonacci retracement here, you can see I took from a significant resistance for quite some time down to the most significant low that I saw based on this wick, this low, and this low. So even if you brought this down a little bit, it kind of makes it look a little better as far as being above that short term 336 retracement. Then I got this, obvious support line in green. It's been staying above the past several days at least. The volume has been pretty abysmal since I pointed out back on this day how good it was that day. But I believe it's going to be one of the early movers like it was in 2017 based on what I've been seeing. The monthly MACD. All right, so what can I say about this is a lot can happen with a little bit of movement in this MACD histogram. And for example, during these first few red marks in the histogram, it was 82% drop. By the way, that happens to match up precisely with the date that I talked about on that December 28th of last year. The daily volume surpassed that. It was more the volume that it had seen since that particular day. I believe that's the case anyway. I can't say that for sure, but I had a vertical line lined up there earlier, so. Oh, no, this is it. So this day. Was it. Anyway, I'll show you what I mean. December 28th, or December 27th, whatever day that was. You can see the volume indicated there. I guess it was actually January 7th, 2018. So anyway, what I was getting at was as the this monthly MACD is coming up, these last few shit. Come on. Alright, as the monthly MACD is coming out, these last few yellow months of being down in the histogram on its way to zero, a lot can happen. It's still significant. It's very significant, yet still almost nothing in the long term. Meaning it can go up to here, or here. And at that point, the monthly histogram, or the monthly MACD histogram, might be barely zeroing out and still have a good amount of room to move up. That's what I believe is going to happen. Similarly, the monthly MACD of Bitcoin against Bitcoin, it actually looks a little better, doesn't it? Yeah, it's a little closer to the zero line. A little more, 1 or 2 more months of yellow. Yeah. So, even though things are pretty bleak for crypto in general, you know, in the short term. I believe we're on the brink of something huge in general, like stock market coming down, crypto in general benefiting a lot from the decline of the stock market, while the dollar is declining in value at the same time, uh, so on and so forth. But bullish divergence right here. Uh, and the RSI has not come below that low since it made it. It double bottomed at it and meandering sideways since coming up from that double bottom. You could draw a little formation on the RSI here, showing that it kind of has to go one or the other pretty soon here. One way or the other pretty soon. Really soon. These lines work very, almost as effectively as, you know, the lines in price action. 2 years of drawing lines on indicators and so on and so forth, combining one chart with another. I can tell you some basic shit that works. This is one thing that works. What was I gonna do? It's pretty much it, I guess, as far as the pink coin analysis. Long term, I could have a lot to say about it, but anything I say is beyond what I've already said is just gonna sound like dreaming, I guess. But like, I see it easily getting up to 1,000 satoshis in the medium term. I'll say that much. Like it had strong support up there for quite some time in that region, and it's easily one of the most yeah, it's the most. All right, fuck. Cut. Yeah, let's do this so I know. All right, that draws my attention while I'm editing the video. Uh, all right, so I guess moving on from Pinkcoin because I'll have more to say on the TA side of it when it starts moving. For now, anything I say will sound kind of ridiculous in a bear market to most people. But in the short term, we should see it breach 150 satoshis within, you know, the first month, I believe, of the Bitcoin bull market. Versus the dollar, there's not much room to move before some serious trend lines are broken. Serious long-term trend lines. So, the breach of those trend lines shall be significant. And then I'll just go into real quick, end it with the last chart I showed in the video that helped me predict this latest pump. The sum of the stock market indices divided by the price of Bitcoin. In my last video, it was 10.5, about that. And it was the third time it was hitting that 10.5 level since mid-September of 2017. And it was also it marked a significant dip for the stock market when it got there again. And then for a third time, right after my video, as expected, another nice dip. I expect that resistance to hold for quite some time. Maybe forever. But then again, once stocks move on to the blockchain and they're traded 24/7, then maybe the indices have somewhat of a chance of competing against Bitcoin. And maybe a breach of this chart happens. It probably needs more than that, honestly. The economy and everything in general. Like I believe probably the dollar would need to be tied to a cryptocurrency, or the dollar phased out altogether in favor of a dollar pegged cryptocurrency. However that works out. I've been talking about that for a while. It seems far fetched, but central bank digital currency became a thing as soon as I started talking about it. And what else we got? We got the price of Bitcoin minus gold is reacting exactly as I foresaw. You know, you can see my tweets from last week or the week before, where I mentioned a potential double bottom in the short term. Well, that happened. Right here is the double bottom. This green line is a really long-term trend line on the weekly chart. And this is a 0.886 retracement of the distance between the previous peak and the most recent peak. And when I made my video the other day, it was basically at an intersection of those two significant lines. And since then, gold or Bitcoin is worth significantly more gold than it was. A few percent or so. How much actually? 6.5 at the moment. Alright, Bitcoin itself, and then I'll end it there. This is a chart I've been watching for a few months or so. It's a public chart. I'm trying not to alter it since I made it public, other than, you know, this head and shoulders pattern, inverse head and shoulders pattern, and this copy of a past movement I'm projecting into the future. To move it to the right as it doesn't happen when I want it to. But it's gonna happen. I'm telling you. This is pretty much what it's gonna look like. Hopefully I'll be able to put that in my technical analysis and is not bullshit. One of my episodes there. Whether it's episode 2 or 5 by then. Knowing me, it'll maybe be episode 2 if I'm lucky. 'Cause I'm so lazy, but before, and then hopefully a few months later I can post this completely filled out almost perfectly. But anyway, got off tangent there. 450 day long bullish divergence still in effect. The downtrend in the RSI, or the down, yeah, a lower low in the RSI, a higher low in the price, just barely. Basically a double bottom with that low. Not that that means anything necessarily when that's already happened, but you know, Man, my earlier takes were so much better. I was so much more fluent. Cut. So yeah, the ever since I identified this 450-day long bullish divergence, the RSI has been somewhat healthy. It has broken significant resistance in the long term, and it has now tested as support. Now, I didn't say it's the most significant resistance that it broke, but that is significant right there. If I was to adjust this, see, it has that to contend with in the very near future. But once it busts through that, there ain't going to be much stopping it, I don't think. That'll probably coincide with the breakout of this messy head and shoulders pattern. Which would make a lot of sense as far as it being over with from that point on. The breakout of that head and shoulders is now as low as 38.37. So this is the average price of Bitcoin over 10 exchanges or so. So approximately 38, 50. Things are looking really good at that point, in my opinion. All right, I think I'll leave it there. Enough. Oh, one more thing, Fang stocks. Maybe two more things that I don't know if I showed. Yeah. All right, just a couple more things with the stock market. First of all, Fang stocks themselves as a leading indicator. This is Facebook, Apple, Amazon, Netflix, and Google as one chart. Some of them mapped out over time. Whenever this was, late January, I started talking about bearish divergence on Twitter. Since then, it's been sideways for the most part. It was looking pretty bearish right here. I thought it was pretty much done for, especially with the bad news that was coming out with Facebook stuff, but whatever. Somehow people bought into it. I guess Trump's State of the Union or whatever was exciting to them, but probably more driven by technicals, I guess. But anyway, here we see the one-day MACD has crossed bearish twice now within a couple weeks. Just barely right there. And now it's looking like it might see a significant downturn based on the histogram, based on that being significant resistance that it was at. The MACD was at significant resistance and it seems to be failing at it. And the RSI has not gone higher than the point when I identified the bearish divergence. So the target of the bearish divergence is down here. And, you know, this head and shoulders pattern, if it plays out, it's pretty significant, you know, from head to neckline. And then it's even more significant percentage-wise when you bring that down. So from where it's at to the head and shoulders target, somewhere about 50%. 45, 50%. Now, the stocks themselves, the indices themselves, as a collective, is now below the 61.8 retracement of the whole impulse down last year. It broke it. People got excited for a little bit, but ultimately it's failing to be supported at the 618 right now. And on the monthly time frame, we see a wick above the 618. That's all I believe it's going to be. The daily time frame MACD, as I pointed out on Twitter this morning. So follow me on Twitter for the most real-time updates, because I'm lazy and I don't make many YouTube videos necessarily, especially when I don't have many viewers. But yeah, almost closing. And the last time it closed to the downside, or last time it crossed the downside, it was a tiny little pump, and then a very significant drop. So, just saying, be careful. I put all my time into this so that eventually people will find me, and my advice, not necessarily what I show them, will help them make better decisions. And in the meantime, they'll profit from their better decisions, and hopefully feel inclined to donate to me, as well as my successful trades, and everything's going to be great. But for now, this is fucking torture. It's taking way too long. And I put everything I had into this like a dumbass, complete noob. But I believe I've really honed in on my TA skills. I see things that most people don't, as far as just the inverse correlation to with the stock market, that I'm 95% sure is going to be extremely obvious by the end of the year. The majority of people I talk to in the TradingView chat room, for example, will argue with me about it. Whether it's, oh, there's no correlation at all, or the correlation is direct rather than inverse. And I see where they're coming from, because a lot of times it may seem that way. But, you know, if you chart, you know, Bitcoin against the stock market, for example, you see it otherwise. You know, the correlation becomes a lot more obvious. Much like this, you know, chart I pulled out of my ass here. This is the price of Bitcoin, 30 times the price of gold, minus 20 times the value of the US dollar currency index. Kind of giving a little bit of weight to, you know, varying the amount of weight I give to each one depending on how important I think it is in the whole, or how significant it is currently in the whole world economy. And especially since Bitcoin is so volatile and can easily be 100K, you know, in a year or two. Bitcoin being multiplied by 1 is plenty, especially in this at the bottom of the bear market. But gold is obviously very important, and then I'm basically charting it against DXY. I'm looking at a just a random mathematical spread of involving all these numbers, involving all these three things, and it's allowed me to somewhat help predict, the bullishness on gold that I had before it rose to 1300 and above. I knew either Bitcoin or gold was going to do something well, probably both of them, and do something good. And now both of them have. And now I know it's kind of in the middle of nowhere as far as this chart is concerned. Of course, I know where it is as far as other charts are concerned. So that all helps me. If I was making trades, it would really help me. But unfortunately, I'm stuck in a position where HODL, if it is what it is. If you go into making all the classic new mistakes, you're either just gonna get out of crypto a broke man, or you're gonna HODL until it's worth something again. I made the mistakes. It's now worth almost nothing. I gotta HODL. If it ends up being worth half as much tomorrow, well, what's half as much of nothing? Well, okay, I still have nothing. I mean, compared to the over $100,000 I had at the top of the bull market, hypothetical crypto dollars, what I have now is I may as well let it ride. And I wouldn't I would have a different attitude if I was in Bitcoin itself. Like, it's not my mindset necessarily, but I'm just in this unique position because I made the classic new mistakes. Once I get out of them, my strategy is not this. But it will be to invest in great projects like Pinkcoin. I will HODL Pinkcoin. That'll be my strategy, long-term strategy for that one. That's a long-term HODL. I will sell, obviously, bits and pieces as I want to get into other projects, as Pinkcoin is short-term peaking off, and I think I might have a chance of buying it back in the future at a cheaper price. But so right now, actually, I have like a good amount of coins. Yes, I will sell because I bought the absolute bottom pretty much right now. But there's the majority of my coins I bought much higher, and I'll be hodling them until they're probably 10x where I bought them, which is 100x from here. All right, I'm blabbing. All right, I'll leave it there. Good luck. All right, on to the technicals. Um, Starting with the Bitcoin versus the dollar chart because it looks a little better. After you set it up. Much. Well, here's a couple screenshots. Chronicles once we're going again. Alright, I'll leave it there. Good luck. A friend of mine, follower, Chronicles once we're going again. Alright, I'll leave it there. Good luck. Take it easy. Alright, I'll leave it there. Good luck. Take it easy. Okay, starting with a cleaner version of the pink coin chart. The most significant formation I've seen has been a huge falling wedge that started forming basically from the peak in June of 2017. I mean, it started forming in April, but it's started making that formation somewhat of an official thing. That first decline from it, and then these lows kept solidifying it. These lows, the highs. Obviously, there was a period of time during the bear market that if we got a little extra bearish beyond that falling wedge pattern, but ultimately it shot right back up every time it fell below it. And now it's clearly above, well above, we're just completely out of that formation. Looking at it at a logarithmic scale, it's maybe a little more obvious that it's well out of it. And let's see. If we draw a Fibonacci retracement, from this bottom in 2016 up to this very significant resistance from this peak here and these bodies here. So just under 800, that's definitely, that was a key area. I can tell you from being involved in it back then. 322 based on this Fibonacci retracement looks to be a significant area of resistance on the way up. Obviously, so will this whole area. But right now, there's not much resistance in the long term. There's really nothing in the long term in the way of it going up. Even this line here, it's kind of holding up. Draw this. Make it a little more precise. It's perfect. Oh, it's a very, very long-term trend line that held up the vast majority of 2015 before finally going blasting off in 2016. Came back and retested it. And that trend line prevented that falling wedge, from filling out completely, at least. So that's a pretty good sign, in my opinion. The monthly MACD, a lot can happen in a little bit of, movement in one direction or the other. These first three reds, for example, are crazy. Imagine if these last three reds or these last three yellows were similar but in reverse. If there's all kinds of ways to look at Fibonacci, of course. I realize that was something, but then there's so many other somethings that mean something. For example, let's try this. Let's go backwards. All right, that doesn't matter. I mean, all right, that doesn't work. Well, actually, for example, let's try this. Going to the absolute top of the wick with this long-term Fibonacci. And we see the 236 held up significantly as resistance quite a few times. Prior to that, it was struggling to hold support, and it did for a while. Technical analysis is not bullshit. Like, say you had drawn this that day, you know, you would have seen Bitcoin react to that 236 in the following months quite significantly. And that's the case all the time. Any chart. That's basically, you add charts together, subtract them from each other, and then multiply them, divide them. It's a chart is a chart. So TA seems to work regardless of what you're doing it on, almost, but it just works better in the more liquid markets. That's all. It's there's more people acting on every trend line and Fibonacci support line, so it's more of a it fulfills itself, more of a self-fulfilling prophecy with the more liquid markets. With crypto, it just takes a bull market to be able to make accurate bullish predictions. Basically, it seems like that's the case in my experience, for me anyway. I mean, I've made plenty over time here, like, you know, nailing the bottom of a bat pump, basic attention token, and whatnot, but with harmonic patterns. Try this again. No, I didn't like that take. All right, here's a much cleaner chart that I haven't been drawing on for years. From this chart, it's pretty clear to see a very long-term support line that it came all the way back down to test now. It's now officially broken out of this long-term falling wedge pattern. The target of that falling wedge pattern, based on where it broke out of the pattern from, is about 900 satoshis. So that's 1,450% above where it's at currently. The all-time high at Bittrex is 5,272% up. This 236, this very long-term 236 retracement will be quite significant at 729. And above that, 780-ish will be quite significant too, based on this high and a couple other things from previous takes I noticed, like a different Fibonacci retracement, for example. 800-ish in general, it will be very significant. Once it breaks above 1,000, that'll be significant too. course, just a nice round number, and it just happens to match up with like this body right here, probably. Yeah, and so that'll be crazy bull run, hopefully, very shortly after 1,000 Satoshis is broken. But in the shorter term, I'd be watching out for just the obvious, recent highs around 130, and then these lows here. Got this level right here, 170, 250, and I'll be a lot more bullish on the technical aspects of it. How the technical side of it is looking once it gets above 340-ish again, 350 ideally. Break free of this bullshit, and it should be well on its way to 729. Hopefully, at that point, come back down and maybe test that support again. Unfortunately. But if it can get right through 729 without much of a problem, instead of coming back down to test, whatever, 500-ish, that'll be bullish as fuck. I think. That should hopefully bring it right up to, well, at least 894-ish. That's falling wedge target, approximately. Then maybe a dip down, a dip back down to this support line at that point on the way to 382, maybe. Never know. It's TA is not foretelling the future necessarily, although I try to use it as such a lot of the time, and because it can be, it can help you get a really good idea of what's probable and what's not, at least. And then in real time, it helps you make your decisions based on what's holding and what's not, what indicators are looking like. Several various things that all come into play. There's bullish divergence here on the daily time frame between this point here, let's say this point right here, and this point right here. Clear downtrend in the price, while the RSI made a lower low. Since then, the RSI has not come to that level again, let alone breach it. So the RSI has been maintaining itself while the price is just, there's significantly more green coming in, but it's basically just diagonally down still for now. The reversal in price looks like it might just barely, hopefully, be starting to happen right here. 50 is a nice round number. It's ridiculously low for Pinkcoin compared to where I've started getting into it. Although, unfortunately, when I first saw it, it wasn't all that much higher than this, and that's when I should have got into it. But The volume has been pretty abysmal since I pointed out uh, back on this day how good it was that day. I believe it's going to be one of the early movers like it was in 2017 based on what I've been. Monthly MACD. Alright, so what can I say about this is,